Welcome back. Well, President Biden's economic agenda is stalling, so he's hitting the road to try and sell this massive spending to Americans. Democrat lawmakers are saying that a deal will get done at the end of the month, but they're looking at both shortening the timeline for the proposed spending plans and cutting the programs to lower the price tag. On Sunday Morning Futures, I spoke with House Minority Whip Steve Scalise about the state of the agenda today. Watch.
Yeah, you saw that.
It's a good way to put it. Michael, here's how the Wall Street Journal writes it. To get a lower spending range, some lawmakers, including progressives, are looking at shortening the timeline for the proposed spending. While others, including centrists, want to focus the funds on a smaller number of programs. If you shorten the timeline for proposed spending, that's just a gimmick. That's exactly what they're doing now, which is how they get to $3.5 trillion versus the true cost of these programs living out 10 years, which is $5.5 trillion. So I think that's a non-starter. Where are you on what can be done to change the price of this?
Yeah, look, I would say this needs to be defeated and fought tooth and nail by everyone. If Manchin and Sinema are still holding firm and holding pat, the good news is that there's probably a few other Democrat senators behind them. What you have to realize is the bigger the government gets, the larger the share of GDP it gets, that never retracts, and it makes it harder for the country to grow. So if right now the private sector is 80% of GDP, and after this bill will be 60%, that means you have 60% of our overall economy driving the entire growth. And this is not going to take our deficits to $1 trillion or $1.5 trillion. I'd estimate it'll be closer to $2 trillion in perpetuity, which means 5 or 6 years from now, we're starting to enter a range where the debt service payments are such an overwhelming margin of the tax revenue that comes in. We enter a debt cycle where it just a tube that you just start getting worse and worse and worse and eventually fall off a cliff. This is the worst piece of legislation I've ever seen in my lifetime, and let's hope and pray that it gets defeated.
Yeah. Well, it's the biggest as well, and they want to lock it up in a matter of weeks. We'll see. And what a sad state of affairs to watch Kyrsten Sinema tweeting out a video which shows how the Texas National Guard is preparing for an 80,000-strong caravan that's headed for the U.S. border. The Texas Military Department planning to double the amount of border guards to roughly 2,500 troops. We are talking about a significant situation here with doubling down on efforts to contain what is overflow at the border. Michael Lee, we continue to see the administration ignore this overflow. Last week, Secretary Mayorkas said that if the U.S. is forced to not use Title 42, which would send people back, then we should expect a group of 400,000 people in October. That would be double what we've seen the last couple of months, Michael. It's been averaging 200,000 apprehensions every month, and that, of course, does not include the gotaways.
Maria, the Biden crisis isn't ignoring it. They're welcoming it. This is something that they want. I don't know if it's to provide cheap labor to keep wages down for large corporation, or if it's to find new voters. But this is going to be over 2 million people crossing illegally into our country in 1 year. This is just absolutely mind-boggling that they are letting this happen. But there is a political motive that they won't necessarily say out loud. But this is awful.
Well, you make a good point. What is the motivation? Let's go right to Wall Street. Top investors watching your money. Joining me right now is CIT Investment Associates Senior Vice President and Senior Portfolio Manager Bryce Doty, AmeriVet Securities Head of U.S. Rates Gregory Farinello, and Michael Lee, Strategy Founder Michael Lee. Great to see everybody this morning, gentlemen. Thanks for being here. Well, this also has to do with the macro story, right? I mean, Mike, we're getting the September jobs report out on Friday. Extended federal unemployment benefits ended last month. We've got schools and officials reopening, offices reopening, rather. What are you expecting from the jobs report, and what's priced into this market in terms of its impact on capital markets?
Yeah, this is one of the most significant jobs reports of my lifetime. Coming out this Friday, again, as you mentioned, with the expanded unemployment benefits expiring, where are all the people that want to go back to work? The estimates are only 475,000, which I would say is a minuscule number considering JOLTS the job opening labor turnover survey is near 11 million, and that's a record high. Pre-pandemic, the high I think was close to 8 million. So there's a massive amount of job openings. There's a tremendous labor shortage, and where are all the workers? Are we going to have a permanently lower labor force participation rate like we saw after the great financial crisis? So, I mean, look, if the Biden administration does not get a massive print, and I'd say almost double of expectations, I could see things getting really ugly for them on the labor front. So if we do get a blowout number like that on Friday, which we should see based on the fact that this unemployment extended, the argument that the extended unemployment benefits have really kept people out of the labor force. Now that those are gone, we should see a very large number of people come back to work. If that happens, I can see the 10-year Treasury running much higher, because that gives fuel to the Fed and Jerome Powell to start his taper, and the prospect of rate raises coming in 2023, something that a few months ago I thought unimaginable, coming along. So I could see a pretty big equity sell-off, and as well as a bond sell-off on Friday if we get that. And then if we get a meager number, I don't know that equities will do too well, but I could see the 10-year firming up around 1.5.
Well, look, add on to that, pile on to all of those issues you just mentioned, the vaccine mandates. Because the vaccine mandates are pushing employees out. You know, we're in the middle of a pandemic, and we've got nurses saying, well, I don't want to get the vaccine, so I'm fired. I better go find a new line of work. I mean, it's just extraordinary, these policies and their impact. Bryce Doty, Gregory Farinello, pardon me, Greg, and Mike, great to see you all this morning. Thanks so much. We will talk with you soon. Mike, you're with us all morning. We're happy about that. Quick break, and then coming up for the big buzz of the morning, an historic return for football's greatest star. Yes, Tampa Bay quarterback Tom Brady receiving a warm welcome from his former team as the Buccaneers faced off against the New England Patriots yesterday. Brady also setting the NFL's record for all-time passing yards. The Bucs won 19-17. Michael, it was not easy getting there. A lot of chatter throughout the game. Can he do it? Can he do it? But he did it by the close.
Yeah, they say Father Time is undefeated. Tom Brady is giving him a run for his money. It's unbelievable to see a guy this age playing at this level. So, look, keep it coming, Tom. We love watching it. It's history in the making every time he gets out there.
Christian.